This is the briefing for Friday, April 25th. Very interesting day in the stock indices today. Mostly during the past week, the indices appear to have been improving and strengthening from an internal perspective. You can see that breadth was fairly strong for the last several days of trading. But today there was a huge divergence in market breadth. You can see the testing of this 550 area on the spiders, trading and closing just above it today. So we made a decent new high above yesterday's high, but breadth was negative or barely positive. Now, it was much worse in the first couple hours of trading this morning, but it improved somewhat this afternoon as the market kind of rotated and then had this slow move back to the upside once again. 52-week highs minus 52-week lows really is positive, really just kind of flat for the most of the week. Not a lot going on, but most concerning for this rally is what's happening with volume. You can see volume falling off even between the last 3 days of trading and today. Volume is much lower, which is very, very concerning. Now, I did have a call this week where somebody asked me, client asked me if I thought this was a bear trap, and the answer to that question was very difficult. It certainly could be a bear trap where buyers are brought into the market thinking the low is in, and then all of a sudden the market reverses and sellers just hit the market with a vengeance, and we see you see the low taken out, the most recent low taken out, and potentially going much lower. That's a possibility, and the problem with that is, and the problem with it not being a bear trap is that this is a market-driven market based on news events. And so if there's good news that comes out in the off trading hours concerning tariffs, the market's going to gap higher. If there's bad news that comes out, the market's going to gap lower. Even during the trading day, any type of news is going to reflect in the market in terms of determination of value. And so we could move in either direction. It's just a very, very difficult market to trade at this point in time. But with that said, if we look at just what information the market has given us, at least up to this point in time, this area 550 in the spiders is a very important resistance area. And you can see that we've come right up to it, tested it in yesterday's trading, came right up to it today, and closed right at 550.55. So that's going to be very important. Now, the key to that is going to be seeing a follow through in Monday's trading and seeing the internals eliminate this divergence, which would be very, very important. 52-week highs minus 52-week lows increasing. And most importantly, we need to see volume increasing. This tells me going into a key reference area or a key resistance area that the number of buyers that are buying this market are declining, and that's a result of what we're seeing in volume right now. And if that's the case, if buyers are waning, then potentially this part of the rally anyway may be due for a pause or some type of counter trend rotation. In terms of the Qs, it's a little bit different. You can see the Qs have traded above this 465 area and closed above it, closed above yesterday's high. So there was follow through in the Qs today, closing at 472.56, where resistance was 465. That's now support. Now it's going to be very interesting to see if the NASDAQ can continue its move. You can see that breadth, there was a huge divergence in breadth. Once again, it was much worse during the trading day today, and then towards the end of trading, it began to improve somewhat. But once again, look at volume. Volume is just very, very weak. It does not suggest this rally is attracting more buyers, but it really just gives us an indication that it's just the opposite. A little bit different in the IWM. You can see it is approaching, but not quite at this 197 area, which is its next upside resistance. But once again, look at volume and look at breadth. Breadth actually negative in the Russell in today's trading. We did reach a point between, I think it was Wednesday and Thursday. We were extremely overbought. You can see that right through here. We worked a little bit that off yesterday, and then it came back again. And then, of course, today's trading, because breadth was so weak, we're basically neutral at this point in time. So this indicator would tell me that there's a potential for the market to continue moving higher, or it could move lower. I'd say it's about a 50-50 probability in each direction. But at least we're not at a point where we're in an extreme position where it would suggest some type of counter trend rotation. Now, key to this is we worked off an overbought condition on higher prices, and that's a reflection of the internals weakening. So keep that in mind in the coming week. You want to see what's going to happen. You want to see the internals beginning to increase to support price and not decrease as they did in today's trading. So in terms of the upside resistance, 550 in the spiders, very important area. Next above that is going to be 580. And now this is 550 is also support in the spiders. And then below that's going to be about the 510 area, which is this low through here. And in the Qs, we're looking at the next upside resistance coming in around 493, 492. Support comes in at this 465 area. The next level of support is going to come in right around 427, this low right here. And in the Russell, we're looking at upside resistance at the 197 area. Downside support is going to come in right around 180. And then, of course, below that is going to be the recent lows in the 171, 172 area. Russell is showing a little more weakness than the other indices. And as you can see from the charts, the spiders are showing a little more weakness than the NASDAQ or the Qs. So it's going to be interesting to see if we do get some type of a turn down next week, what will happen in terms of the NASDAQ itself, whether it's going to hold up or whether it's going to begin to collapse. Now, I will say this. You know, those of you who have been listening to these briefings for some time know that one of the characteristics of a counter trend rotation is that it'll happen in 3 steps. And that typically, where there's typically equality between legs 3 and 1. So I did the numbers based on this being leg 1, this leg 2, and leg 3, and it projected the low would come in at the 483 area in the spiders, and this low actually came in at 482. So there was equality between legs 3 and 1, at least at this point in time. So it's going to be very important to see what happens right here at the first part of next week. And in the Qs, I did the same thing here. The projection for leg 3 was down to 419, and the low here, this low here actually came in at 402. So there's really not equality there, but it's not a high probability assessment in looking at this, but it certainly has worked in some cases in the past in terms of equality, as it did in the spiders, as you saw just a minute ago. It's going to be a very interesting beginning to next week. Have a great weekend, and I'll pick this back up on Monday for subscribers.